factors determine metal prices, and why is gold price traded in dollars?
What factors determine metal prices? It depends on the metal. Ultimately, you're looking at supply and demand for all metals, but the nature of supply and demand differs between metals. If you're looking at the base metals and the industrial metals, it's basically use in economic functions in the economy as it is typically worked into consumer products or into infrastructure products, and that represents demand, and it is used up in that form. If you're looking at what I would describe as a monetary metal like gold, then demand is much more in the form of investment demand. So for gold, there's a much greater investment component to demand. For the industrial metals and minerals, I'm not saying it's not there, and it is extremely important because it often determines the difference between whether something is in a bull market or a bear market, but typically as a percentage of total demand it is much smaller, and you see a much larger industrial component for both the bulk commodities and also the base metals.
If the dollar falls through the floor, then will the gold price fall through the floor?
It depends, because what you're asking is if the dollar price falls through the floor against what? Now, if it falls through the floor against gold, then de facto you're saying that the gold price will rise, yes. If you mean if the dollar falls against a basket of its currencies, which is what most interrogators ask when they put that question, I would say that there have been times, if you look in the last 30 years, where there has been a strong inverse correlation between the dollar and the gold. So strong dollar, weak gold, weak dollar, strong gold. And there have been times when that correlation hasn't been there at all. At the moment, there does seem to be a correlation between strong dollar, weak gold, and vice versa. And therefore, if the dollar were to fall through the floor for some reason in the next few weeks or months, yes, I would expect that to translate into a strong gold price. However, it does depend very much on why the dollar is falling through the floor. Is it because the Federal Reserve has suddenly said that they're going to keep interest rates low, or they're even going to put them down or make them negative indefinitely, or is it for some other reason? So it depends very much on the circumstances in which you find gold. At this present time, yes. In the very near future, I would say that if you were talking about the dollar falling through the floor against a basket of currencies, I would say that would be good for gold. You can't always assume that indefinitely into the future, however, that correlation will remain the case.
Gold's down 38% from a weekly June 2011 peak. Pretty much the chart shows lower lows and lower highs. Gold bugs are still adamant higher. It's fascinating, but is it a place for capital investment over the next few years, or is it a long-term store of value?
It's definitely a long-term store of value, and of course the key attribute that gold has that almost nothing else has is it's nobody's liability. So if you do have it, then you will always have it in that physical form, and if the whole of the rest of the world goes to zero, you will still have an ounce of gold that will still have intrinsic value. So it is one of its key functions is as a store of stability, and a commentator a long time ago said it's amazing how many financial storms you can weather if your portfolio is ballasted by ever such a little amount of gold, and I think that is still true. It tends not to reflect what's going on in broader economic terms, and at a time of great turbulence, and I think we're not out of the turbulence in the global economy by any manner of means, I would regard it as an insurance policy. And in my experience, particularly when people come to claim against them, no one minds having an insurance policy.